Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Last week, gold hit an all-time high before quickly pulling back, and now the bulls are back in the market. With the Fed expected to cut rates soon and increasing uncertainty around the US election, gold prices are staying relatively high. However, high real interest rates and differing gold ETF holdings between regions could pose risks. Traders will be keeping a close eye on the upcoming US GDP and core PCE data, as this could be key for gold's next move. From the gold against US dollar daily chart, gold's price action has been quite a roller coaster. After hitting a peak of $24.83 last Wednesday, gold faced heavy selling pressure. It pulled back for 4 days straight, fell below the 9-day EMA last Friday, but found support at $2,400 on Monday. Recently, buying gold has become popular again, with traders looking to retest local highs around $24.30 from mid of April and mid of May. Well, for the upside potential, I see $24.30 as a key resistance level before we can expect further gains. If there's another pullback, I'll be watching how the price behaves around $2,400 and the 50-day moving average. As the bulls make a comeback, we're left with three main questions. Why did gold drop so sharply? And perhaps more crucially, how much more can gold rise? Is it possible for gold to hit those previous highs again? Well, regarding the sharp decline, I think profit taking is more likely than a trend reversal. With US CPI continuing to cool, signs of a weakening job market, and the Fed shifting to a more dovish stance, market expectations for Fed rate cuts this year quickly jumped from 1.5 to 2.5 times in just half a month, pushing gold to a new high of $24.83. However, as prices near the psychological $2,500 level, profit taking by long positions led to a more pronounced correction. Through macro factors like central bank easing in developed markets, geopolitical risk, and increased central bank gold purchases remain supportive. Unless major negative factors emerge, I do believe personally the short-term adjustments in gold prices doesn't really change the overall bullish trend. Well, for gold's potential upside, aside from factors mentioned, even with the Democrats changing candidates, prediction markets do favor Trump. Traders are pricing in further U.S. monetary easing, expanding fiscal deficit, and continued T-bill issuance. So I think these factors will keep push gold prices higher in the medium to the long term. However, before buying gold on the dip, keep an eye on two things. First, the U.S. real interest rates goes up mechanically when nominal rates stay the same and inflation continues to cool. This will put pressure on gold until the Fed starts cutting rates. Second, even though central banks are still buying gold, the World Gold Council reports that global gold ETF outflows in the first half of the year were the highest since 2013. And there were big outflows from US and European gold funds, while Asia was the only region to see inflows. This trend might change as the Fed begins to cut rates, but before then it's still somehow a concern. So in summary, after the recent high and pullback, the bulls are coming back. I still personally see strong bullish drivers for gold, like expected Fed rate cuts, rising U.S. fiscal deficits, and strong central bank demand. Although high real interest rates and significant gold ETF outflows are concerns, I remain optimistic about gold in the short term. For gold's upward potential, watch for tomorrow's U.S. second quarter GDP and Friday's June core PCE data. The forecast is for economic growth to rise from 1.4% to 1.9% year-on-year, with core PCE increasing 0.1% month-on-month and slightly dropping to 2.5% year-on-year. While a Fed rate cut in September seems almost certain, if economic growth disappoints and inflation keeps cooling, the market might price in more aggressive rate cuts for the year, making a move above $24.30 in gold more likely. However, unless there's a significant negative surprise that rises recession fears, hitting $24.83 again in the short term might be tough from my personal perspective. So that's pretty much for this week. If you have, any insights on the US PCE or whether gold might revisit its all-time highs, share your thoughts in the comments below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!